Good afternoon, class. I just wanted to welcome you to week 3 and talk a little bit about what we're going to be covering this week. Just a brief overview. So in week 3, we're covering the topic of property transactions, and we'll be covering chapters 5, 12, and 13. And this will include the tax treatment of sales, exchanges, and other dispositions of property. How to determine realized gain or loss, recognized gain or loss, and the classification of recognized gain or loss as either a capital loss or an ordinary loss. And we'll also talk about basis, property basis, and how to calculate basis based on certain scenarios. So chapter 5 covers property transactions, capital gains, and losses. So we're going to talk about, is there a realized gain or loss? There isn't always a gain or a loss in a property transaction. Is there a recognized gain or loss? So you'll have to learn the difference between a realized gain and a recognized gain or loss. And then what is the character of the recognized gain or loss? What is the carryover basis to the assets received? And what is the holding period? So how long have they had the asset? Is it short term or long term? Chapter 12 talks about non-taxable exchanges. Remember, there's not always a realized gain or loss. And so we know that generally gain or loss has to be recognized if there's a sale or an exchange of property, and this is in section 1001 of the IRS code. There are some exceptions. So there is a tax deferral under section 1031 for like-kind exchanges. So for example, if you had a piece of rental property and you just exchanged it for another piece of rental property, that can be considered a like-kind exchange, and you can defer the tax on that. And then tax deferral under section 1033, an involuntary conversion. So for some reason you have to convert the property to some other use or get rid of it. It's not voluntary. That can be tax deferred. And then also tax-free under section 121, the sale of a personal residence. There are limits to that, but up to a certain amount, if you sell your personal residence, you do not have to pay tax on that. Chapter 13 covers property transactions, section 1231, and recapture. And so in this chapter, mostly we're going to deal with classification of recognized gain and losses. So is it a capital gain or loss, or is it an ordinary gain or loss? So you're going to learn to distinguish between and compute basis, realized and recognized gain or loss on property dispositions, and you'll assess the taxation of capital asset gains and losses as opposed to the taxation of ordinary assets. This week you have homework number 3 in My Accounting Lab. You'll use study plan number 3 to help you with these concepts if you need a little extra help. If you're struggling with the homework, you'll need to go into the study plan. Remember that you can use the study plan, and it is actually organized by learning objective. So you can go right to the learning objective that you're struggling with. Just remember that it's a tool to use to help you with any concept that you're struggling with. No quiz this week. Your quiz will be next week in week 4, and it'll cover everything from modules 3 and modules 4. So it's very important that you complete the homework in module 3 and the homework in module 4 before you try to take the quiz, okay? You want to really be prepared for the quiz, and the homework is going to help you to do that. Have a great day. Have a great week. Let me know if you have any problems, any questions, or any concerns. You can email me, you can post and ask the professor, or you can post in Hoot Me. Have a great day, everyone.